We've heard a little bit from our governor more recently, like last week. She talked about inflation being homegrown. And, traditionally, not traditionally, but over the last 2 years, we've been talking about inflation having been imported from other countries and supply chain driven inflation. She's now sort of suggesting, and I don't really know where she got the data from, but that inflation is homegrown. In other words, we're all spending too much because we got too much to spend, perhaps. I'm not sure exactly what she means. I want to touch on that. The last day or so from her digs in wherever she is overseas at the moment, she spoke about that. I presume her field agents have told her this, that whilst Australians with mortgages are unhappy with the Reserve Bank putting interest rates up, which is a no-brainer, they are coping quite well. Now, it's not what I'm hearing, and I'm exposed to 500,000 borrowers. It's not what I'm hearing. It's not what I'm hearing in the street. It's not what people email me, DM me, text me, tell me when they see me in the street. It's not what I'm hearing.
Yeah.
That's my field agency work. What are you hearing, mate?
My field agency work, if we can call it that. In the last month, I've been travelling around to Perth, Sydney, Melbourne, a number of different times, depending on who I'm seeing a range of big corporations, little corporations, real estate businesses, tech companies, talking about the economy. And none of them, I repeat, none are saying that conditions are good. Some of them saying things are okay, particularly those associated with a bit of artificial intelligence and technology. Yeah, businesses still buying machinery, equipment, technology. They have to keep up. So
because they have to.
They have to, because that's just business. So they're doing okay. They're doing it not strong, because of course some companies are using that as a discretionary cut in their spending. So we're hearing the banks are sacking people now.
Yeah, because they're going to use
because the economy is weak.
They're going to use technology to replace people.
Correct.
Because it's cheaper.
Correct. Like bank branches. Who goes to a bank branch with a check? We all go tap, 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 and every bill's paid and money goes. I don't know how you do it, but you do it. And so therefore we're going to have notes and coins probably disappearing in the next, 5 years or something like that. So the businesses that are doing it tough are doing it very tough. Those associated with retail, discretionary spending, so the high-end items, they're the ones that are under a fair bit of pressure, because we consumers, and it came up in yesterday's retail sales numbers. So it's always interesting when an anecdote turns into hard data. Yesterday we had the hard data for October. Retail sales minus 0.2%. They're lower now than they were at the end of 2022, so 11 months of weakness, because we consumers aren't silly. We are responding to the fact that prices are going up by more than our wages, although that's starting to change. We're responding to these rate hikes. Gosh, are we ever? And even the small business sector, who usually use their personal finances to fund their overdrafts and things like that, they're paying higher interest rates. So summarising it, from what I'm hearing, and even starting to see in the hard data on the economy, the Bureau of Statistics, hard data on retail sales, building approvals, this sort of stuff, the economy is weak, unambiguously.